If you trade ICT and you're tired of missing clean entries towards your draw on liquidity, don't worry, because in this video, I'm going to be breaking down the one simple strategy I use every single day, 2 hours a day, that makes me over $30,000 a month. So if you guys are looking forward to this video, make sure to hit like and subscribe. Now, enough talking, let's get into this video. So the first thing I like to do is start with the daily time frame every day going into the session. I just want to see like what price is doing, where are we most likely to draw to, where are we coming from, things like that. So if I look at this chart here, I noticed two things. One, we are trading inside of a daily BISI, therefore I am bullish if price is being respected. And then two, where is my draw on liquidity? Well, if we're trading inside of here and my low-hanging fruit objective is going to be this previous day high right here. Now, luckily for us, price was starting to move away from this daily BISI on the hourly time frame. So that was very, very good confirmation that we were at least going to hit this low-hanging fruit, which was the previous day high. Now, the next thing I want to look for is a point of interest. My favorite points of interest are fair value gaps or swing highs or swing lows. In this case, I'm using this 1 hour fair value gap, or a BISI, which stands for buy side imbalance, sell side inefficiency. Now, I only trade after 9:30, so I want to see what happens when price comes into this level. So price comes down into our fair value gap on the 1 hour. Now I want to see a move away from here. Now this is where it gets interesting, so pay attention. I immediately bought right here on the close of this 5-minute candle. Why did I do that? Well, the main reason why is because I want to see price do two things from here. I want to see a bullish reaction, and I wanted to see it start to disrespect some bearish PDOAs. So this bearish order block started to fail, and also we had a bullish reaction. Now you're probably wondering, well, hey, why is your stop down here? Well, remember when I said we were watching that hourly FEG? Now, if price came down here, this would be an invalidation of that 1 hour fair value gap. This would be the low of that 1 hour candle. You're probably wondering, well, Nick, why are you only taking a 1.2R trade? Now, stick with me. So I entered here on what's called a starter position. This is usually half of my normal size, and then I start to scale in once I start to see my breaker entry or my unicorn setup. So price is hovering around here. Now, once we get a close above this candle right here, which is our breaker, I will add in some more with my stop below the breaker. Okay, it's not going below the low, it's going below the breaker. You're probably wondering, oh wow, you got two trades under 2R. Well, not really, because I added half size right here and half size right here. My average fill position would be right here at 339.9. This would be a 2.5R trade with my stop below the breaker and a clear invalidation point right here. Like if price gets below this low right here, you know, it's probably going to go lower. Now watch what happens. Price runs to our TP very nicely. So you see how I was able to take two small risk to reward trades and turn them into one very, very solid 2.5R trade just from adding a starter plus my unicorn strategy. Because a lot of times, and some examples I'm going to show later in this video, is you're not always going to get your entry model, and that's fine, but I at least want to be part of the move, even if I only got a little bit of money on the table. And this is one of my one-on-one students, Mark. He was actually having the same problem. He was watching the 1 hour chart 90% of the time, and he knew where price was going, but somehow he would always be missing his entry. However, we were able to fix this together on a call, and he's been having great success with this strategy. This is his entries right here, just like the ones I was talking about, and this is his P&L from last week. Now, I will link that program down below if you want to work with me one-on-one, just like Mark. Now moving on, this is in Q. Now what do we first notice here? Well, we notice price closed away from this daily BISI. So it came down and it had a nice wick or reaction away from it. Now the second thing I noticed is that we have some clear equal highs up here to target, right? Now I can drop down to the 1 hour chart like I do 90% of the week. I'm just watching this chart to see if I can get a reaction from some points of interest. Like I said, fair value gaps, swing highs or swing lows. I'm bullish, so I'm either looking for a significant swing low to get ran or a reaction from a 1 hour fair value gap. Now, notice a couple things here. We have a couple fair value gaps in here. So we have what's called a potentially a breakaway gap. This is a fair value gap, and then it's most likely price is going to tap into this third one right here. Now, if you want to mark off all three, there's nothing wrong with that. Now, on the lower time frame charts, we also notice we have another draw on liquidity, because the higher time frame draw on liquidity is all the way up here. We don't have to catch that full move though. We only need a small bulk of the move in order to have a profitable week and to make a bunch of money. So I want to see what happens once and if price comes down into this 1 hour BISI. So price comes into this level right here. And what do we notice? A bullish reaction from this level. Now I want to see some invalidation of bearish PD arrays. So we have this 5-minute fair value gap right here that was completely disrespected. Now what I will do is I will immediately buy whenever this candle hits right here, with my stop most likely below the swing low on the hourly, because if price runs that, then it's probably going to be a bearish day. I don't think that's going to happen. And I'm also leaving myself room if price wants to give me a retest of this breaker. Now, why is this a breaker? Because this is the move up before the move down that runs this liquidity into this 1 hour key level, okay? So I have a starter position right here on this candle closure, and I will add in more up here if we get a retest of this breaker. But as you can see, price ran without us the whole way. Now, this is a question you must ask yourself. Would you be more mad losing half of your normal position if price invalidates right here? Or would you be more mad if price completely came all the way down to the key level that you were watching and moved towards your draw on liquidity that you had marked out? For me, it's the second one. I would be more mad if price came all the way down here and moved all the way to my draw on liquidity without me. And the reason why I wanted to use this example is because you guys know me for mainly trading the unicorn model. And unfortunately, people that just trade the unicorn model, you wouldn't have been able to get tagged in here anyways. And if you did, you didn't have enough room for price to run all the way to these highs to make this trade worthwhile in terms of your risk to reward. Now, last example here, starting off with a daily time frame. As always, we notice we have a daily fair value gap right here, and we have a high to target up here, which is previous weekly high. So now dropping down to the hourly chart, and I hope you guys are starting to pick this up by now. Daily, hourly, M5. That's mainly all I use, okay? So you don't have to blend all these time frames and all these strategies in order to take a trade. Keep it simple, stupid, all right? So as you guys can see, just like the last trade, we have a couple of PD arrays that we can use. I'm just going to use this one that price is currently trading inside of right now. And if it goes lower, I will mark that one off. So price comes into a 1 hour BISI right here. And we also have a nice candle closure on the 1 hour. Pay attention to candle closures on the M5, the hourly, the M15, whatever you use. A lot of times they're telling a story ahead of time. So now once price comes into my level, I'm going to drop down to the 5-minute chart to see if I can frame a buy model up to these relative equal highs. This is a clear and clean draw on liquidity. It doesn't get any more obvious than this, okay? Now, what do I want to see before adding to a starter position? I want to see a bullish reaction and for it to invalidate some bearish PD arrays. So this right here was a very nice bullish reaction, a big body candle, not a whole lot of wicks. So I immediately bought right here with my stop below the hourly low of the fair value gap, okay? Now I'm also leaving myself room to add in right here on the top of this breaker. Why is this my breaker? Well, because this is the move up before the move down that takes liquidity, okay? So price comes up and we get a nice move above here. Now I'll add into my breaker at the beginning of this candle right here, targeting up to this high. But remember, because I want half size here and half size here, I have an average fill position of 20,078, which makes this trade a 3.7 risk to reward. And the crazy thing about this strategy is if price wants to come back and retest this breaker, say it goes all the way back up here and then it comes down, most people's break even will be here, this breaker. But I will actually be closing it in profit because I got such a good entry down here. But fortunately for us, price ran all the way to that previous weekly high. And that is how we were able to have a banger of a month in May. And like I said, I still use the unicorn strategy and whatnot, but it mainly came down to me was what would make me more mad, right? I actually know a couple people in the Discord right here, they didn't actually take this breaker because it didn't get a close above here. Now for me, this is only 1 point or a half a point. It would actually make me more mad if price were in all the way to here than not closing above this candle by 1 point. Like I will swallow that 1 point in order for me to make some money. But everyone is different. You would have to ask yourself, what would make you more mad? If price ran without you, or if you got stopped out for a small loss on your starter position. Anyways, I hope you guys enjoyed this video. And if there's one thing I want you to take away from it is if you know price is going to go higher or lower, just make sure you're trying to get a part of the move. It doesn't have to be with full size. You can save the full size entry for the breaker, the unicorn, or whatever model you use, as long as you're just getting a starter to help pay for your analysis to that high or to that low. So like I said, if you guys enjoyed this video, make sure to hit like and subscribe, and I'll see you guys back here on the next one.